Okay, so gentlemen, welcome to this our session today. And basically, I'm looking at the overall, like an overview of auditing and assurance. And the most important thing here will be like an advisory regarding what you need to choose whenever it comes to these specialization papers. I've gotten students telling me that I'm going to choose, for example, advanced management accounting at this advanced level simply because some students believe it's easy. So they are not choosing this paper simply because of what they aspire to do in the future. They are simply choosing this paper because, whichever, it doesn't have to be MA, it can be advanced tax or advanced audit that they make, they decide to choose. And they're choosing it simply because it is a simple paper. No, you need to look at the future. Remember, our regulator, which is ISPAC, that licenses auditors, from this new syllabus, from the new syllabus took over, these people will not be able to license you as an auditor if you have not chosen advanced auditing and assurance. They'll not be able to give you a tax practitioner license if in this case here you don't do taxation. So if I'm the one who is planning to do these papers in the near future, then I would choose to do what we call double specialization. I would go for double specialization. What does that mean? Instead of choosing one, I would choose how many specializations? 2 of them. CASNEB allows that. It's called double specialization. It's called double specialization. Very important that you get to do advanced taxation, you get to do advanced auditing because of the future. Most of us, ladies and gentlemen, end up being practitioners. We end up working for auditing firms with an objective of starting our own auditing firms in future. So for us to be able to really get like the composite license from ISPAC that allows us to do like many things for our clients, we need to do double specialization. Really, I'm not so keen of advanced management accounting. I know it's a good discipline, but there are very few organizations in Kenya that have advanced management accounting departments. I only advise people to do advanced management accounting if, for example, at the moment, they are practicing advanced management accounting skills at their workplace. If, for example, you are in a management accounting department, then you can choose AMA. I also advise people to go for this government paper, what we call the Public Financial Management paper. It's quite a nice paper, but go for that one if you're working for government. But otherwise, if I were you, I would encourage most of us to do double specialization, where they specialize on audit and assurance, and what here, somebody? Taxation. You can never go wrong. And then ensure that you work hand in hand with existing auditing firms, even if it's on a voluntary basis. Like you can come and, for example, volunteer at Aura and the company. I run an auditing firm in Nairobi here, right? You can come like over the weekend. Over the weekends, voluntary. I don't have the capacity to pay all of you. Over the weekend, voluntary, to learn some of these skills like taxation. How do you compute tax payable here for companies? How do you do what we call tax planning? How do you audit clients, etc.? And then, of course, you'll be able to get those skills so that at the end of the day, we can sign up for you that you have the requisite auditing and taxation, and of course, business advisory generally, skills, which will be helpful to you in the future. Otherwise, today, I would want us to talk about auditing and assurance. And if you remember very well, we introduced something called independence, that an auditor has to be independent of the directors of a company that he or she is auditing. The most important thing is that independence from the directors. Remember, generally, human beings are lazy. That is what McGregor told us, that human beings were what here? We are lazy. We like free things. And that is why if most of us were to be appointed to become directors of these great entities, chances are we shall be thinking of how do we steal. So if we still would want to cover up, and for us to cover up things nicely, then we'll always think about how do we go to bed with our auditors. And that is why an auditor is supposed to be what here? An independent contractor. Is supposed to be independent of the directors. At no one time should he ever kneel down, in this case here, making requests to the directors of the company. If he does that, then his independence is compromised. His independence is compromised. So an auditor must be independent. And I went ahead and gave you a very good acronym that will be assisting you to measure your independence, to measure your objectivity. Somebody who is not independent will never be objective. If you are not independent, then your pendulum will, you're supposed, as an auditor, you're supposed to be having your pendulum swinging to whichever direction depending on the audit evidence that you collect. If you collect, in this case here, audit evidence that is able to show that the company's financial statements are not okay, the company financially is unhealthy, then as an auditor, I should be free to say, I'm giving you a qualified opinion. A qualified opinion means what here? A bad opinion, right? If the evidence suggests otherwise, that this company's financial statements are okay, then I should be able to give what we call unqualified or a good audit report, a good audit report. But now remember, the thing is that our pendulum, if you remember that pendulum that swings, so we have our pendulum here. So we have, in this case here, qualified report. We have an unqualified report, like that. My pendulum should be free to swing to whichever direction, depending on the kind of evidence that I collect. If I collect evidence showing that the report should be qualified, ziko dosari, then I should be able to issue this. So in this case here, it's about flexibility. It's about being objectivity, without being swayed by any stakeholders. And of course, in most cases, the stakeholders that will sway you are the directors who have already stolen, and they would want you to come and help them cover the truth. Cover the truth that should be able to unsettle. Remember, directors, if it gets to the shareholders' ears that these directors have stolen, the shareholders will fire them in the annual general meeting. Fire all of them. Fire all of them. They'll be voted out. So for them to be able to cover up their misdeeds, they would want always to be on the same page with who? To be on the same page with the auditors here. So the auditor, from definition, an auditor is supposed to be what here? An independent contractor. An independent contractor. We're supposed to come and review financial statements of an entity with what objective? With an objective of giving an opinion as to whether the financial statements portray what we shall be calling a true stroke fair view. Stroke fair view. So I'm repeating again, and don't worry about writing down. These videos will be shared with you. The video will be shared with you. So I'm repeating again that the auditor is supposed to be an independent examiner. He's supposed to be an independent contractor. Of course, this person is contracted in most cases by who? The shareholders of the company. So he's contracted by the shareholders of this company, the ones who own ordinary shares of the company, with what objective? With an objective of going to examine financial statements prepared by who? Financial statements prepared by directors of a company. He's reviewing those, examining those financial statements so that he can come back to the AGM and tell the ordinary shareholders that you guys, the directors who are in place from the financial statements here that they have prepared, everything in the company is okay. You guys are in safe hands. Your wealth is being taken care of by these directors faithfully. So the question is, do these accounts, do these financial statements here portray a faithful presentation of the affairs of the company that the auditor is examining? And we say that this auditor then should be able, ladies and gentlemen, to exercise, should be able to exercise situations, should be able to avoid compromising situations. Compromising situations are those situations that will enable him, or that will make him, in this case here, lose objectivity. that will make him compromised. For example, if he goes to the auditee company, and this guy is being treated to great, for example, you're told today we are taking you to Masai Mara, so they can fly over there with great balloons, at whose expense? At the company's expense. If you start doing such things, automatically your objectivity will be compromised, because they can't treat you like that, and then you come and say that the financial statements they have prepared are bad. So there are what we called objectivity or independence threats, what we call the independence threats. So this independence threat, is there anybody who is able to remember the acronym that I gave you for independence threats? Is there anybody who is able to recall the acronym that I gave you for independence threats? Is there anybody who is able to tell us the acronym? Somebody who was following here. I gave you a very good acronym. I gave you a very good acronym. I gave you a very good acronym. SAFIS. Thank you very much. It's called SAFIS, yes. It's called SAFIS, yes. It's called SAFIS, yes. So we have what we call self-interest. We have what we call advocacy. We have what we call familiarity. We have what we call intimidation. We have what we call self-review. We have what we call self-review. So remember, under self-interest, if I give you a job as a moth auditors, a moth CPA, and then we give you a job to come and audit RCM Online College. If we give you a job to come and audit RCM Online College and see how Aura and the other directors of RCM Online College are handling affairs at RCM Online College, and then you happen to be having a financial interest or whichever type of interest. So financial would mean, for example, you have the college's shares. So you'd want the college shares here to increase in price. The only language you'll be talking about here, Amoth Apupa, will be the company's financial statements are excellent. When you say like that, the market outside there responds by demanding for more of the company's shares. The share price goes up. So if you have an interest in the company to protect, please, your objectivity is compromised. Run away from that audit. We have advocacy. Like now, Amoth, I believe you are amongst the biggest crusaders of this college as our great student. You believe in our quality. So believing in our quality, you must be looking at some of us as if we are saints. So in case you are sharing, for example, on Facebook pages, you're saying that this college is good. So it means that you have a position. You are in the same position with us. You are promoting our position, which is telling the public that we are a good college. So later on, should we give you a chance of auditing us, and you have been our advocate, just like advocates of the law courts, you've been our advocate. Chances are, ladies and gentlemen, Amoth will only be saying, even if he discovers that there are some soily areas, bad things you're doing, Amoth will want to propagate his position. Is that so automatically then, if you've been working for us in the past, promoting our previous positions, then automatically your independence is compromised. Your independence is compromised. Then we have familiarity. Familiarity is where you come and audit an organization for way too long. You've audited us, for example, for 15 years. It doesn't matter how you came in. When you came in, of course, there was a lot of cold moments. It was just greetings, hi. But you see, after 3, 4, 5 years of working together as our auditor, that relationship, which used to be cold, is going to be warm. We are going to have a break of the ice. And the moment we become so familiar with each other, that is a very serious threat on auditors. It's a very serious threat on auditors' objectivity. The auditor is compromised there because now we have become so close. Even you're attending each other's functions. When there is a barrier at my place, the auditor comes on. Ladies and gentlemen, remember, auditors are supposed to be very independent. They're supposed to be very independent. Then we have what we call intimidation. Like I remember, there is some time I'll not be able to mention these. I was auditing, in this case here, some tea factory. I think the directors over there are done crazy things. So you see, as an auditor for this tea factory, before I release my audit opinion to whoever who contracted me, I must come and discuss with these directors of this tea factory. Ladies and gentlemen, every other place was locked. The door was locked. And these guys told me, hey, before you leave this place, you must agree with us that you must give us what year, this kind of a report. We have invested in this company. We as directors, we have invested our time, energy, and a lot of resources here, and we would not want you to spoil what year, to spoil our great name out there. Remember how the tea factories are being followed by like the farmers around. So basically it's a societal investment. So of course it means I panicked. And in this case, I'll tell these guys, you know what, then I'm going to give you guys a good opinion. But I'm a clever guy. Once I got out at that place, I resigned immediately because I knew that whatever decision I will make will be able to hurt what year, my professional standing at ISPAC. All right. If I decide to side with them, at the end of the day, this thing will be uncovered. If I go and say these people are bad, then they will kill me. So in situations where you feel that there is undue pressure, what you need to do is to resign. Or if, for example, you are just coming to the end and you have been able to, you must get away, like through witness protection program. We have in this case here through ISPAC and other channels going to court, etc., etc. But at the end of the day, whenever you feel that you are very much intimidated as an auditor, you need to find an exit. Remember, whenever these threats exist, the very best thing is to resolve the threats to some reasonable level. And if you're not able to manage them, reduce them to some reasonable level, please resign as an auditor. And then we have what we called self-review. And a self-review, I told you, and this is something I've always seen whenever I go to audit. By the way, you need to find more information about my audit firm. It's very important. It's here, www.aura-cpa.com. If you want to know some of the services you're offering there, is something I've never told most of you. You know, most of you just look at this, Mwalimu, this is a teacher. No. I ran one of those kind of successful auditing firms in the country. You need to visit us. We are at Corner House, 13th floor. Corner House, 13th floor. 13th floor. You'll be able to find us there. Great. So it's www.aura-cpa.com. What do we do there? Of course, we offer business advisory services. There are businesses that start and they collapse very fast. So we're able to look at the chain. What may have led this company to collapse if it collapsed, right? If it's in operation and, for example, not doing very well, we are able to do that synopsis and come up with solutions. And of course, most of these companies that fail very fast, where do they go wrong? Marketing. I'll be able to tell them, you guys, your marketing, you don't have any presence on social media. All right. So she'll be able to offer solutions there. They collapse because most of them would want, in this case here, to hide taxes. So they have got tax issues with KRA. All right. They collapse in this case here because of thin capital. The directors, the shareholders are not willing to keep on pumping money to this company simply because they believe that the company should be a cash cow for them, not an avenue for them to keep on investing. But remember, this is a baby. You started this company 5 years ago, right? It's still a baby. You're a baby. Don't throw it, in this case here, with dirty water, right? So keep on investing. So we were able to come up and, that's business advisory. We also do tax consultancy. You know, nowadays we'll get somebody going to a cyber cafe and then they sign up for what year tax obligation that they don't understand. It's good from the beginning. Have your company being, or rather when you're opening it, registration company, have your auditor being involved. Filing of returns, move slowly. When this thing, for example, you're able to push revenues of up to 5 million per annum, register for VAT obligation, etc., etc. So tax consultancy, and then of course we have our usual what year audit services. Our main product is the taxation, especially tax planning, where we advise companies on how to run their taxation systems optimally to reduce the tax obligations legally. We're not telling people to evade taxes, but avoid. How do you avoid taxes in a legal way? So when we go to these companies, ladies and gentlemen, then because of these kind of things that you're doing here, the directors over there will see you as a solution to so many problems. So then what they will do, these guys will come and tell you, hey, please do tax for us. Please do financial reporting for us. Please do this and this for us. So on top of the auditing and assurance that you're doing, then you'll still have to do other duties for them. When you do so many things for them, you will get in future when you are auditing, you will get a situation where you are looking at your own work that you did. You are required in this case here to audit yourself. So it's not proper. When you audit yourself, automatically your independence is compromised. Now, ladies and gentlemen, today I would want to take just 5 minutes of your time to teach you something very, very special about audit procedures. Audit procedure. I've gotten a job. We have signed everything that is required and engagements and etc. And then you tell me now we have reached this situation where you are supposed, in this case, here to start collecting what year evidence for purpose of what year making a decision, for purpose of giving what year an opinion. There is what we call audit techniques. Very, very important for you to appreciate this. Audit techniques. And this is what I'll discuss in 5 minutes and I will be done. So these audit techniques, you are always supposed to have them in your fingertips. They are A-E-I-O-U, A-E-I-O-U. The first technique here is called analytical reviews. We have in this case here an inquiry. I'll have to inquire quite a lot. I'll have to do a lot of inquiries from who? From the directors of the company, employees of the company, and other stakeholders to get evidence. We have in this case here what we call inspection. Yes, I have to inspect documents. We have what we call observation. Observation, of course, ladies and gentlemen, we must observe systems. We must observe, for example, using our own eyes. If they tell us they've got 32 vehicles, one day we'll tell them, hey, you guys, these vehicles are not going anywhere. Just parade them. I need to counter them. I need to observe the processes, etc. Then we have this U. This stands for recalculation, and reperformance. Recalculation and who? Reperformance. Recalculation and reperformance. So these are great tools as an auditor. When I'm trying to put down my working papers, I must always ask myself, have I used analytical procedures, the analytical reviews? And analytical procedures here, basically what I'm doing, I'm looking at the financial, they could be like 5-year financial statements, depending on the internal control systems they have. The poorer the internal control systems, the more of these procedures I will have to apply. So if it's analytical procedures for a firm whose ICS is almost nothing, then I have to ask, for example, for 5 years, financial statements, I calculate, I do the analysis, and there I'll be able to come up with funny trends, which I should be able now to even investigate further. Then we have inquiries already. I've been able to explain this. These are inquiries on third-party confirmations. For example, I could talk to the companies, what your customers, through what we call data circularization. We ask them to confirm how much the company owes them. I can talk to the suppliers. I can talk, in this case, to the bank, for bank to do confirmations, etc. I must keep on talking. I must look at documents. I must look at physical assets. I must, in this case here, look at the processes for me to be able to gather what we call sufficient, appropriate audit evidence. Ladies and gentlemen, that marks the end of my today's presentation. Remember, my name is Dr. Joshua Aura. I teach at RCM Online College. RCM Online College is basically a college that does most of their classes through Zoom. We happen to be supporting, like by the end of last semester, we're supporting about 2,000 students through our Zoom and the video classes, right? So we are quite affordable. During these hard economic times, as we are just there, we are charging 4,200 per paper. 4,200 per paper, that is CPA. We also have the CFFE. CFFE, we charge 6,500. All right. So these papers, if you pay for three papers, 3 papers at once, if you pay for 3 papers at once, the CPA papers, 4,200 times 3. If you pay for 3 papers at once, then we shall be able to give you our revision kit. We have a great revision kit with CASNEB questions and answers. With CASNEB questions and answers, we shall give that to you for free. Quite a great way to support. We are just there to support CASNEB students. All right. Now, I told you the bulk of our students prefer what here? Prefer these Zoom classes online. However, there are those students who have told us time and time over and over again. They've told us, you know what? We are working for government ministries or companies in town center, and we are leaving the office at 5 p.m. You don't expect us to go and reach home at 6 p.m. and log into Zoom. Would want you guys to give us physical classes in Nairobi town. So if you're interested in our physical classes, we have found that the Stanbank House, first floor, RCM. Stanbank House, first floor, RCM. And because here the rent is quite high, if you choose to go for the physical sessions, we shall charge you 9,000 per paper. Ladies and gentlemen, our pay bill. Our pay bill is 62. This pay bill is 6242 839. Account number are basically the papers you're doing. Like, for example, financial reporting, auditing and assurance, advanced, etc. All right. And once you pay, then you should be able to send the message to 0719 525,000. You should be able to send the message to 0719 525,000. So it has been a pleasure hosting you this night, and I'm looking forward to welcoming all of you to my sessions. I would want you to be my students, and I promise you guys a first-class service. Otherwise, thank you very much. Kindly enjoy your night. Bye-bye. Bye.